Hello, this is Dustin with Dustin's Dollars. Today I'm going to be talking about Tellurian and specifically about what we know, what we don't know about the rising costs of Driftwood construction and phase one, and what that could potentially mean for their cash flows. Before I begin, let me remind you that I am not a financial advisor or a financial professional of any sort. All opinions that I express in this video are mine and do not represent those of any company or any other individual. I currently hold a long position in Tellurian. So basically this video should be for your entertainment purposes only, because I could be wrong about everything I say in this video, and you need to do your own research before making any investment decisions. So that being said, this article came out just a couple days ago from Reuters. Rising calls for U.S. LNG revive stalled export projects. That would be they're saying Tellurian Driftwood is one of those stalled export projects, but at higher cost. And you read through the article and they talk about how material prices have gone up. The 20%. In general, they're saying material prices have shot up 20% in the past 2 years. Gas compressors cost 30% more. They talk about steel. They talk about nickel in this nickel piping. LNG storage tanks are about 10%. Sorry, the steel is up about 10%, and there's some components that need nickel, and nickel is up like crazy. Actually, I pulled up this chart. So it's fun to see. Just very recently, it's up like crazy. Apparently, because a lot of nickel comes from Russia. It said, which I don't know. I believe them, I guess. But the thing here is that they're speculating how much. Hey, material costs are way up. So maybe these LNG export terminals are still going to get built, but it's going to cost them a lot more. And so I generally agree, but I wanted to look and see. So first of all, what do we know from Tellurian? And here's roughly what they have released, at least in the investor presentation. This gives you a rough overview, where they have they have a lump sum turnkey contract with Bechtel, and so they agree on the price, and the price is set for a fixed period of time. And I'll go into this in just a second as far as what we do know. But sorry, and even this, I'm jumping around a bit much, but even in this, they did have a comment from Joy, who is one of the executives from Tellurian. Because the author of this article reached out. Tellurian added $300 million to its original 15.2 EPC contract with Bechtel for Driftwood LNG, spokesperson Joy Lechnar said. She did not say when the increase went into effect or if another is pending. So what we do know is, what I'm fairly sure what that refers to is this particular price refresh that was in April of 2019. If you can see that there, hopefully that's legible for you. I could maybe try to make it bigger. We'll see. Right, so April 2019, and this is when the overall project cost went from 550 per ton to 560 per ton. Right, and you can see that 27.6 million times 550. Right, that was your 15.2. Divide that by 550, multiply by 560, and you see now that's roughly 15.5. That's where you get that $300 million increase in the EPC contract. Again, that was from April 2019. So that got me thinking, okay, great. They locked this in April 2019. I wonder how long that price was good for, right? And I think as any investor should wonder that, right? Because it changes the economics to know how much they're paying for that. And it's something that I had sort of taken for granted before. So I did some digging. In their filings, and I was able to find, they have their original, at least some details from the original contract right there. And that's where we have this for phase one. They list out the price of, the $7.2 billion. And this, I believe, is from 2017. Let's find the date. Yeah. The 10th of November, 2017. This was their original EPC contract, at least the details that they released to us. Then I found the change order from 2019, where this actually went into effect, where they increased the price. And this is where is it at? Somewhere down here. So they said that this is up by quite a bit, by $271 million. The contractor, Bechtel, was going to take on Bechtel was going to take on $271 million in increase from their portion of the contract, or from their portion of of the costs, and there was going to be $101 million increase to Tellurian, at least for this particular piece. And I think there's a couple other things in here that add up. And overall, they do list out at the very bottom where they say, hey, for phase one, the original price was here, and now the price is here, right? So it went from 7.24, or actually 7.2 before this particular change order, to 7.4 after this change order, and 375,000 euros. And this price was good until, let's see if I can find it, was good until November 1st of 2019. So you're like, well, that can't be what they were still working off of, can it? Right? Because this investor presentation is from November of 2021. So I found a later change order from, oh man, this is October of 2020. In October of 2020, you could see that they actually had edited. There's another one in between, I didn't show here, where they were actually getting Bechtel to agree to push out the date by which this particular price that they have locked in is still good for. And so they had it, prior to this change order, it was locked in until March 30th of 2021. They got it extended by a whole year. And specifically the wording is that it is in the event the owner fails to issue the NTP, the notice to proceed, in accordance with section 5.2b, which has, is a whole section describing what are the conditions for a notice to proceed to be issued. If they fail to issue it by this particular time, then either party shall have the right to terminate this agreement, yada, 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 right? And clearly neither Tellurian, or sorry, I shouldn't say clearly, but I assume neither Tellurian or Bechtel wants to terminate the agreement. But, Bechtel might want to change it if they say, hey, prices have gone up so much, we're not going to be making any profit out of this thing anymore, and we want a fair deal. So they did not issue, if you look in section 5.2, that's why I have this up, you can look at 5.2b, and basically they are very clear in this section. I passed it somewhere. Oh, because this isn't exactly 5.2b. So we're in 5.2, section 5.2, and they do talk about, they differentiate, this is what I'm getting at, they differentiate between limited notice to proceed and the notice to proceed. And they're very specific, again, in this wording, in that change order of, what needs to happen in order for this all to be clear and for this price to be locked in, is that Tellurian must issue the notice to proceed, not the limited notice to proceed. And what they actually issued at the end of March, in reality, in 2022, what we saw was the limited notice to proceed. And I think if you actually look at, I'm not going to pull it, but that's what we saw, right? And so the question here is, what happens now? Because they did not issue the full notice to proceed. They did not have the full, billions of dollars locked down, enough financing sufficient to fulfill owners' payment obligations, right? That's what they're saying is needed for the notice to proceed that they are looking for in order for this contract to be sort of executed and for that price to be locked in. So the question is, what is the price at this point, right? Because I think they've blown past their expiration date on this, at least from what we know. I think it's reasonable at this point, given some of the concerns that are in this particular, article. Like, they're not wrong. Prices of materials, at least as far as I can tell, have gone up, and have gone up by double-digit amounts, probably since these prices were all evaluated and agreed to in 2019. And I think that has probably gotten worse since, October 20 of 2020, right? That's when this particular change order was put in for the contract date to be extended from March 31st, 2021 to March 30th, 2021 to March 30th, 2022. So at this point, I think we're in uncharted territory. I don't think we know exactly what the price is. I mean, I do think that Tellurian and Bechtel have a good working relationship. I think we've seen that over time. And I mean, not least of which is because you actually saw that Bechtel took on some of those price increases themselves, right? In this prior change order, the price refresh that they did in 2019. So, clearly they've got a pretty good working relationship, I think. And, because they split that. And, if we look at a couple factors that I was just, kind of thinking for myself, how do I model this? And we don't know what all the prices were that went into it. So I can't actually give, a very strong opinion of, how I think the prices have changed. But if you look at labor, right, I'm just skimming through 2017 labor average. If I'm looking from 2019 I'm seeing like 50, no, 4,100. Now we're seeing, 50, 5,200. That's up, what, 20%, just roughly, off the top of my head, doing, quick math. 20%, maybe 25%. And I had that nickel chart earlier. I must have closed it. So things have gone up by, let's say, maybe 20%. And in my prior models, if you watch my prior video about Tellurian phase one cash flows, I had already assumed that prices from the prior reported numbers would go up by 15%. Today, I just thought about it like, what would happen if they increased by even higher? I'm on the wrong tabs here. What if it increased by 35%? And again, these are just my models. Do not take these on faith. This should just be an example and an illustration of how I'm looking at it. You should think for your, make your own models, obviously. Do your own due diligence before making any investment decisions. But roughly, I looked at two scenarios. I looked at a 35. Previously, I had been using 15% increase in price. Today, I looked at some higher numbers. I looked at what if it was 35%? What if it was 50%? And I think 50% is probably unrealistically high. I'd be really surprised if it was that high, but I'd like to know as an investor, kind of, it's possible. It's not impossible that things could increase that much. What would that look like? And so this is, you can pause it if you want to model out. This is sort of how I, let's see, right here are the two situations, the 60% debt and the 70% debt, and how much money Tell actually has to, take on as debt, and how much they have to raise in equity here. Would be about 5.55 billion in the 60% debt situation and 3.9 billion in the 70% debt situation. This is if we had 35% inflation. We have 50% inflation. I sort of calculated they'd need 5.85 billion in the roughly 60% debt case, and then 4.5, and these are again rough numbers, 4.5 billion in the 70% debt case. So what does that look like if we look at the 35% inflation numbers, and I carry it over into the actual model? If they're using market gas, right, that's this column here, column B, and let's be what I hope quite a lot is pessimistic, that at an effective share price of $4 per share for dilution. And again, you can quibble over that. I could actually change it right here and it'll update the numbers. We did $4 per share effective price for the dilution. We're looking at the fully diluted share count for the equity portion, or after the equity portion, I should say. The free cash flow per share that I would get with my model in the 70% debt case is $1.67 per share. In the 60% debt case, that would be $1.40 per share. And again, that's if they dilute at an effective share price of $4 per share. If this was at 50% inflation, right, even more pessimistic in terms of how much more they'd have to pay for Driftwood Phase 1, this gets us down to free cash flow per share of almost $1.50 in the 70% debt case and $1.35 in the 60% debt case. So, those are obviously not as good numbers, right? Well, let's say, change one thing, increase the share price for dilution up to $5 per share. That increases things a bit to where, even with 50% inflation, you're talking $1.76 free cash flow per share in the 70% debt case, $1.58 per share in the 60% debt case. But even if we go back and I say, hey, $4 per share dilution, which is below their current market price, you'd be a little bit pessimistic about that. This is assuming that they do get this over the finish line. And again, as I've covered in my prior videos, the macro picture and comments from the company certainly imply that this is going to happen. And so if it does, I think this is a pretty conservative, maybe to the point of being quite pessimistic model, where if I'm looking at this down here and I'm saying maybe my most pessimistic, this is again conditional on a positive FID, my most pessimistic model that I have, as I'm trying to be at least semi-realistic here in modeling out, is $1.35 cash flow per share. And we're sitting right now at about $5 per share. Even if you put a multiple on that of somewhere between $5 or $10 per share for free cash flow per share, or sorry, for on the valuation, 5 to 10 with a $1.35 you're still looking at upside from the current price. And don't forget that I think there's a call option effectively built in, or I like to think about it as a call option for all the future phases where the cost, regardless of what materials do, the cost is lower, right? And that's pretty clear on their actual presentation in the contract, where the first phase costs the most per ton of LNG. The future phases are less, and so if they actually get phase one done, I think you have to look forward as an investor in trying to actually value the company and say, well, if they get phase one done, then phase two, phase three, phase four have higher higher value, and that those seem significantly more likely after they have gotten phase one over the finish line, over the initial finish line, I should say, of the FID. And again, just to round it out, we can look at steel prices have gone up, wages have gone up. We saw that chart on nickel. Put things in perspective. This is the commodity that Tellurian will be selling, right? This is LNG. It's gone up way more than those other things, right? If we're comparing versus 2019 back here, where again LNG, this is just for these are futures for June 2022. So this is almost what it costs to get a shipment of LNG like today, or very very shortly in the future. This is trading at $6 in May of 2019. It's at 25 now. This isn't a 20% or 30% increase. This is it went up by 400%. And at the peak even higher. Went almost 10x because of this crunch. And again, the macro picture sort of suggests that this is not going to come crashing back down. That these prices are going to remain elevated, for some time. So, all right, that is what I wanted to cover today. Let's see if there's anything in the chat. Nothing on the chat. Please, if you have any questions, comments, leave them down below. I'm happy to chat with y'all. And I'm gonna hop off. Thank you very much for watching, and have a good one.